Thank you so much for having me again. Thank you, Andrea and MMF Canada. It is my pleasure and honor to be here because I think it is so important to make sure that every artist manager, anyone in the cultural industry and others have an understanding of the business behind the show. And so that you're in control and it makes sense. It's not a topic of huge stress. You should feel comfortable or comfortable enough with your numbers, your tax filing requirements, that you can concentrate on the show in front of the curtain. And so that's what I do. And that's what I love to do because I also have a background where I danced for 10 years competitively. I did community musical theater and I love it. And so it's really been so fun and a natural progression for me as an accountant to support artists at any stage of their career so that they can do what they do best. And thank you for the background on me. That is me. I have a small practice here in Toronto, but I do service all of Canada and cross-border as well. I am going to preface this by saying that everybody's case is different. Everyone's scenario is different. And so it's really important that if you are looking for direct accounting advice, that you seek out your accountant or an accountant that is industry specific, or me, to talk about your situation. So my advice is general, but everybody's scenario is different. The first thing I want to talk about is how to operate your business. And this is not as an employee. So if you are an employee in one of your roles, that is you working for someone else's business. I'm talking about your business as a musician, as a music manager. There's 3 different ways to operate your business in Canada. The first one would be as a self-employed individual. So you have a business, you pick up your income and expenses on your personal tax return, and you pay taxes at the personal tax rates. That's option number 1, very common. Number 2 would be a partnership. So if you are in a partnership with somebody else, or corporations are in a partnership, you share the income and expenses based on your partnership share. Okay. So if you're an individual in a partnership, you would pick up your portion of the income and expenses on your personal tax return and pay the personal tax rates. The third way to operate a business in Canada is through a corporation. So all the small businesses are CCPCs, Canadian Controlled Private Companies, and that is a separate legal entity. The corporation files its own tax return, has its own business number, should have its own bank account, and that is a separate filing than your personal tax return rather. And so that is the separation there. So personally, you can be self-employed, you can have a partnership, which also goes on your personal return, or you can have a corporation that is its own legal entity, can be sued, can sue others, files its own tax return separate from you as an individual. And there's different reasons to operate as such. One of the most popular questions I get is it time to incorporate? So making that decision of which one am I going to fall under? And it's really important to define that first, because that helps us figure out what our filing requirements are, who's paying for what, where are the expenses coming from, which business number are we using on a contract or on an invoice? So when is it time to incorporate conversation? The first or number 1 reason I would say in Canada, even outside of this industry, is for limited liability. So as I mentioned, it's a separate legal entity. So people like to incorporate to have that business as a separate thing away from their personal assets. That's a reason. The second most popular reason, and for tax purposes, is that a corporation has a much lower tax rate than we do as individuals. As individuals, anything above $220,000, today's rates, is taxed at 53.5%, which is very high compared to the corporate tax rate, where the first $500,000 of profit, income less all your expenses, is taxed at about 12.5%. Okay, so every year, the first 500,000. So if you are making more money than you need to live on, and you could leave some money in the corporation and let it get taxed at that lower rate, you have a tax savings there, as opposed to all of that going on your personal tax return. So that's a reason to incorporate. Another reason in this industry that I find people incorporate would be on either tax credits or grants. So there's a lot of grants that are available to corporations only. Now, there are some that are available to you as individuals only, but if you're doing some research on grants and it's we need a corporation. Maybe we need a corporation that's already existed for the last few years. Sometimes they say a business and it's unclear, so you have to look into that, but that might be a reason alone to incorporate, to have a corporation. So once you've established what your business structure is going to be, that lets you determine, again, your tax filing requirements and how you're going to organize for your bookkeeping and record keeping and who is paying what. So it's really important to make that distinction. I would like to mention something that I actually haven't mentioned in the last 2 years, because I guess CRA has kind of changed their ways and it's becoming more clear to me. I often get the question of, well, do I need a business number? Do I need to register my business? No matter which way you go, I mean, with a corporation, you will be given a business number. And this is separate than the HST conversation, which we'll have. When you decide you're in business and you're going to do this as a career and you're going to make money doing this, and the idea is to make a profit doing this, you're in business. If you made $10,000 doing this tomorrow, CRA expects you to report your $10,000, whether you have a business number, you've registered a business or not. However, I'm seeing it come up more and more in my correspondence with CRA that they want you to register your business or have a business number when you start your business. And it's not that it's not a legit business if you haven't done it, it is, but it allows CRA to see you as that easier. I also saw it a lot with COVID support. There was COVID support that was available to businesses. And if you hadn't registered as a business, you had a more difficult time getting that support right away, or, they had to change their tune on what they expected you to have so that you could get the support. So I do recommend that no matter which way you're going. So now that we've established, we're going to figure out how we're going to operate. One of the most popular topics also is, well, what can I write off against this income? So whether you are self-employed, a partnership, or a corporation, the same rules apply on what your deductible expenses are going to be. So you're going to report all of your income, all the income you've earned, and then there's all sorts of things that you can write off against that income to bring your taxes to be as low as possible. The broad definition I like to give my clients is when you're spending money to earn or try to earn income within the Income Tax Act, we want to grab that expense. And that opens you up to a lot of different things. So some very common examples, I will say, any of your music supplies, your equipment. Now we'll talk about capital equipment, but that would be something that would come up. Subcontractors, if you're paying commission fees, if you're paying a manager, any dues and fees, subscriptions, streaming services. If you're paying for Apple Music, that's, research to you. If you're pushing your music or your artist music to TV, you have Netflix, cable, all sorts of streaming services that could be deductible to you, or at least a portion. Your home office, so a portion of your rent, mortgage interest, insurance, property taxes, utilities, a portion of that would be deductible. Portion of your cell phone, internet, insurance is a big one too. And anyone who has gear insurance, that's an example I see that's 100% deductible. There's meals and entertainment that is deductible, but when I say that, I mean when you are paying for at least you plus one other person to have a meal, wine and dine, discuss an upcoming project, that scenario. And so you have to be paying for at least you plus one other person. And on your tax return, only 50% of that meal and entertainment is actually deductible, because CRA is assuming that all of your meals are you plus one other person. That other person is 100% deductible, and you're not actually deductible at all because you have to eat anyways. So if you took 2 people out and there was 3 of you, it's still this 50% rule. No single meals. However, there are travel meals. So if you're going to be away from home for more than 12 hours or you're traveling, there is a deduction available for you there. And then there's also a difference between meals and entertainment and catering. So let's say it's recording time, you're bringing people in to record a song, an album, and you're providing food, just like craft services on set. That is 100% deductible. That's the difference on a wine and dine meal and entertainment type of deduction. You'll have advertising and promotion. You'll have merch costs. If you're selling merch, you'll have the expenses that go along with that. You'll have travel, so hotel, Airbnb, flights, trains, if you have to rent a car because you got equipment with you, bus, whatever the case may be. Parking is deductible, vehicle expenses as well. So if you're home, but you're running around for work purposes, we have a vehicle expense there. When we're deducting vehicle expenses, it's important to note that it's always your business to business drive. So if you go from your home office to a meeting to pick up some supplies back to your home office, you have driven all of that time for work purposes. If you drove from your home office to the dentist to pick up some supplies, to pick up your kid back home, you actually didn't drive for work purposes. So CRA considers when it's personal to business or business to personal, it's just like a commute for an employee. So they don't give you that deduction. It has to be a business to business deduction. When it comes to home office, it should be based on the portion of your home that is your office space and storage. So if you have a recording studio in your home, that would count. And then you basically, there's a formula to figure out how much of your home expenses based on the square footage would be applicable. I'm not going to go too much into it, but there are different risks if you own or if you rent. So something to discuss with your accountant when it comes to what you're going to claim. For anyone in front of the camera or on stage, we have hair, wardrobe, makeup, costumes and clothing, things like that. If you're not in front of the camera, if you're not on stage, you don't get those deductions. And if you are, it's supposed to be specific to the show or the costume, not I got a new pair of black jeans and I wore it for the show and I also wore it to the mall. They don't like that. It has to be specifically for that. And that also includes like red carpeted events. So if you're going to the Junos and you're going to be on the red carpet and you get your hair done and you get your makeup done and you buy an outfit for that event, those are deductible expenses. I'm trying to look to see if there's any more of the obvious ones. I think that's a lot, but basically it's the definition of when you're spending money to earn or try to earn. So if you have something specific, let's say your manager had a baby and you sent them a gift basket, that's very nice of you. And of course, they are appreciative of that, but part of it is advertising and promotion, keeping up with that relationship and reaching out to them. Same thing if you wrapped an album and you sent your producer a bottle of wine, same type of thing, that's advertising and promotion. So all sorts of things. In this industry, sometimes I get questions of like, well, I really enjoyed going to that concert. Why, is that research to me or is that me going to a concert? And the portion of it is research. You're seeing things that people who are not in the industry are not seeing, and you're paying attention and you're learning about trends in the industry. And so I would put that as research as well for your ticket. Now that we've defined what a deductible expense is, we should define how to keep those receipts. And I know that bookkeeping is a hot topic, because we want to make sure that we're ready. If CRA does question something, we want to have our materials ready to show them. And so keeping your receipts is really important. The itemized receipt is what CRA would want to see. Contract, invoice, itemized receipt. A credit card statement, a bank statement is not sufficient support. So CRA would say, that's nice. You went to Esso and you bought something for $50 and I see that on the credit card, but they might say, that could be lottery tickets and lunch. And there's no way to prove that unless you show them the itemized receipt that shows at this price, per liter, and this is how many liters I filled up with. That's what's actually going to support the type of expense, not how you paid for it. So you need to keep your itemized receipts. And for meals and entertainment, they want to know who you met with, that person's contact information, and what was discussed. So it can be a lot of information, but they want to make sure that you're documenting that and we're not writing off, lunch with mom. They want to know that this was actually a business meal. So they can request that information. For vehicle expenses, they want a mileage log. So if you have one vehicle and it's mixed use for personal and business, This log is going to help determine how many kilometers you drove for work purposes versus personal use. And that's how we figure out how much of all of your gas you can write off. And there's different ways to do it. You can do it with the kilometer method that CRA gives us, however many cents per kilometer, or you can do it based on your expenses. But once you have this log that has date, starting kilometers, ending kilometers, where you went, purpose of your trip, it will tell us how many kilometers were business versus personal. And that CRA can ask for that, and they have asked for that. So keeping a mileage track would be good. I get the question, how am I supposed to do that? What does that look like? Are there apps? Yes, there are apps. If you don't drive a lot for work purposes, it can be a note in your phone, an Excel spreadsheet on your desktop. If you are driving around a lot, I do recommend an app. The one that I like to recommend is called Mile IQ. I believe they did start charging for it monthly, but I have a lot of clients that use it and love it. Another one that I've been recommending is called Everlance, and that is a receipt tracker and a mileage tracker. So that might work. But depending on which structure you're going with might determine also the bookkeeping. So we will talk about that. I do want to add in something about incorporating, and it may not apply to you if you're not incorporated, but something to pay attention to if you are incorporated. There's 3 different ways to take money out of a corporation. Because it's a separate entity, you can't invoice your own corporation. So other people can invoice your company, but because you own the company, CRA says no to that, because there's no way for them to match that income went to your return in the year that you took the money out. So there's 3 different ways. The first way would be a shareholder loan repayment. So if you've put a lot of money into your corporation, made an album, funded a tour, and you can repay yourself that money. This is not income to you when you repay yourself. It's like you received another loan or anyone else loaned the corporation money. It's not a consistent way to take profits out of the company, but you can pay yourself that way. The second way would be through payroll. So on your corporation's income statement, you're going to see income, all the different expenses, wages, and benefits. There you are on payroll. And then you have your net income, and the company pays its taxes. The company is responsible for any of its employees, including its owner who's on payroll, withhold CPP. There's no EI in this case because you can't fire yourself and go on EI. Withhold taxes and remit that to the government, and then pay its employee, its net paycheck. And then on your personal return, you pick up the T4 that will basically say this is how much you earned and everything has been remitted on your behalf. If nothing else was going on your personal tax return, you wouldn't owe anything at that point, and the government wouldn't owe you anything ideally. And then you're a direct expense to the corporation. The third way to take money out of your company is through dividends. So dividends looks different because it's not an expense to the company. So your corporation will have income, less expenses, gives you the net income, you pay taxes, and whatever's left over is called retained earnings, which is literally the earnings that have been retained in the company. And from the retained earnings, you can pay the shareholders. So if you are the only shareholder, then you can take money out that way. It's tax paid profits being paid out to its shareholders. The same way if you owned shares in Apple, they could pay out to their shareholders. Now on your personal tax return, you would pick up that dividend as a T5. So a slip has to be issued. Because it's tax paid profits going to you as an individual, you get what's called a dividend tax credit for the tax that the company's already paid, and you pay the difference if there's any additional tax to pay. So payroll is a more involved way to take money out because every month you have to remit something to the government. It's trust money, just like HST. CRA doesn't know that the employee is its owner, so they take it very seriously. You're withholding taxes on behalf of the taxpayer, something to keep up on. You don't want to be late with those payments. And then you have the T4 that's filed by the end of February of the following year. And then the dividend, there is no monthly remittance. It's just what you took out of the company gets classified as a dividend, and then you file the slip. There's benefits and drawbacks to both. The drawback to payroll is the involvement. It's something to do every month. So you or someone else in the company, making sure that those remittances are there. There's programs that are available and services for that. But it's a constant thing. But it's pay as you play. As you take the money out of the company, you pay your taxes. So you don't have this surprise tax bill at the end of the year if you're taking a very big dividend out of the company and you don't know what you're going to owe, which can be very stressful. It avoids that. And then the dividend is you don't have a monthly thing, but you have this unknown tax amount. If you're taking out more than about 40,000, you're going to owe something. So there's that stress. So it's definitely a conversation because there's other things that need to be considered. Are you looking to buy a house? That's going to help determine which way we would go with payroll versus dividends. So something to consider and talk to your accountant about. If you are incorporated, making sure you're taking money out one of those three ways in the most tax efficient way possible. And then whatever's working for your situation. Okay, let's talk about HST. Popular topic. Once you are earning more than 30,000 as a self-employed individual, partnership, or a corporation on a 4-quarter rolling basis, you have to register for HST. You have no choice but to be part of the system. If you don't, they can go back and say, hey, you should have been registered at X date, and now you owe them the HST that you should have collected. So the 4 quarters look like, let's say, January to December. Nope, I didn't hit 30,000. Okay, drop off January, February, March. Add the next year's January, February, March. Did I hit the 30,000? Yes, you have to find out where, and that's the day you're supposed to register. And it's important to do that when you need to, if not before, which we'll talk about, because like I said, CRA can come back and then you're required to pay the HST. And sometimes it can be impossible to go back to whomever you invoiced to collect that HST. Okay. There's no HST on royalties. There's no HST on I would say most grants. I have seen them put HST, and grants and royalties don't go into this $30,000 calculation. So if you're going, oh man, I just received a grant for $50,000, I'm not registered for HST. It's not part of the calculation. There are some special rules around music lessons. So if you are also a music teacher and you issue a certificate or a grade, then there's no HST there as well. So HST, just like payroll, is trust money. So the way this HST system works, and depending where you're viewing this from around Canada, will determine your rate. So in Ontario, it's 13%. And so you're always adding an additional 13% on your invoice if you're invoicing someone in Ontario. So you add the HST at the applicable rate on top of your fee. So your income does not change. You're adding this trust money on top of, you're collecting on behalf of the government. Thank you for your service. And then you move that HST over. So I always recommend a second bank account. Just get it out of your way. Pretend it's not yours. Pretend you did not collect it, or it's not yours. It's sitting there ready to pay into the government. Amongst your expenses, a lot that we just mentioned, you're paying HST. So if you have hired a subcontractor that's not registered themselves, you're not paying them HST. There's no HST on bank charges, interest, insurance, but most of your other expenses, as long as they are in Canada, would have HST. And so when we file your HST return, or when you go to file it, you're going to separate the HST from your income and expenses, and then it will say your income was X. If it was all in Ontario with no royalties and no grants, times 13%, there's your HST collected, less all the HST you spent, and that's what you either owe the government or the government owes you back. So if you have a year where you are not making a lot of money, but you're investing in yourself and you're spending a lot and you have a lot of HST out, you might be in a refund position that year because the government will give you back all of the HST that you're out of pocket. If you have a year where you have not spent a lot of HST, but you've invoiced a lot of HST, you'll owe. But once you pay the government or the government pays you, you're even with them with HST, as if HST does not exist at your business level. And the benefit there when you're registered is that there's no cost to you because there's no HST spent that you're out of pocket. This is also a conversation that needs to happen on a one-on-one basis of should I register for HST, because there are other considerations. I often get into the conversation with, newer musicians that are doing personal events, weddings, things like that. If you're registered for HST in Ontario, at least, you're 13% more expensive than your competitor who's not. And so sometimes that can weigh in depending on what your output's going to be, like how much are you investing in yourself? Are you about to buy a lot of equipment and a new computer? That's a lot of HST you could be getting back. If you are part of the HST system, that means you're not going to be out the HST. If you're not part of the HST system and you're under the 30,000, you're not collecting, but the HST spent becomes part of your expense. So it's still better to be part of the system in most of the cases, but again, it's a one-on-one conversation. Then the question becomes, why am I registered for HST? If I reconcile with the government and then we're back at zero, who pays HST? What sticks to the government? You as an individual, or those who are not registered for HST, pay HST, and that HST goes off to the government, and that sticks there. If you're registered for HST and you're dealing with another business that's registered for HST, you're just passing the HST back and forth. It's not, or collecting it, remitting it to the government, and then the payer then collects it back from the government. So it is in most cases better to be registered, but again, it's a one-on-one conversation. A point I want to make about HST is that once you're registered, it does affect your bookkeeping, because not only do you have to account for income and expenses and incorporations, assets and liabilities, you now have to make sure that your bookkeeping program or your Excel document or whatever you're using is accounting for the HST separately. So I see this as a mistake. Someone's registered for HST and they're like, here's my bookkeeping, but HST is included in all of the expenses. And especially for musicians that are going to different provinces or going outside of Canada, because the HST GST rate changes, or outside of Canada, there is no HST. So if you did a tour in the US, there's no HST there. So you have to have separate column, Canadian travel, US travel. There's formulas that you can just generally pull out the HST, but those separations have to be made in the bookkeeping. While we're on the bookkeeping topic, let's talk about it because it's a popular one.
Can I interrupt you to ask a couple of questions just about the HST piece before we move on?
Yeah.
Someone's asking, is HST the same thing as GST? Sorry if you already said this.
Yeah, no, that's okay. It's a good question. It's GST/HST, and depending on the province will determine if it's harmonized sales tax, the PST and GST portion together, or just the GST portion.
Right. Okay, thank you. And then another question was somebody who's wondering if you can please clarify about music teaching and taxes. So if you're collecting taxes as a music teacher because your yearly income is over 30,000, are you not then supposed to charge taxes to students?
Yeah, so if you are, there's specific things on the CRO website that allow you to be exempt from HST in this area. But in a general sense, if you are issuing a grade or a certificate, if they can move up in a level, then that income is exempt from HST, and then you don't collect for that income. And then you also don't claim HST on your direct expenses in that area.
Got it. Okay.
Okay.
Thank you.
Actually, through our conversation, and I'm taking a glance at my notes, there's a few other things I wanted to say about HST. Once you're registered for HST in one self-employed business, that means you're registered in all of your self-employed businesses. So if you are doing consulting and you're a musician, both businesses are registered if it's self-employed. A corporation, the entire corporation is registered. So any income the company has, you'd be having to charge when appropriate. Another thing, it's really important to make sure that your invoices, receipts show the HST number and the percentage that you're charging. That's really important. So anyone who receives an invoice from me, you see it right there. That's just part of the different rules. If you are registered, there's lots of support and resources on CRA's website to make sure you're following along. Another thing, I've seen this, so I mentioned it, Airbnb, short-term rentals is considered a small business. And so if you have that, you might be at the 30,000 without realizing it if you're not combining the two businesses to look at that threshold. So I've seen that mistake. So just mentioning that. Okay, bookkeeping. I will tell you that it is difficult right now to find bookkeepers that have availability. I've had trouble myself finding bookkeepers that have availability. I have staff that are bookkeepers and they're wonderful. A lot of clients that want an outside bookkeeper, and there's just not a lot out there. I think before we even talk about the intricacies of it, we have to define what bookkeeping is. And if you are self-employed, a partnership, or a corporation, it means different things. As a self-employed person, you need to be reporting to your accountant, or when you do your tax return, your income, your expenses, your HST collected, your HST spent, capital purchases. So let's say big pieces of equipment, furniture, things like that. And then also in the world of grants, your receivables and payables. So if you received a grant at the end of the year and you haven't spent the money yet, we have to talk about that. As a corporation, we need to care about all of the income, expenses, the assets, and the liabilities. So when you have a corporation, it's a separate bank account, hopefully a separate credit card. And so you account for, through the bookkeeping, every dollar in and out of those bank accounts and that credit card. Every dollar has to be placed somewhere. As an individual, if I'm self-employed and I put my money into my business account, if I have a separate account, to help pay for some expenses, me putting the money in doesn't get recorded anywhere. It doesn't have to get recorded anywhere because that doesn't show up on a tax return. It's not income or an expense. But in a corporation, if I put money into my company to fund some expenses while I wait for some receivables to come in, that is cash in the bank and a liability to the shareholder. So they do get recorded. So they are different things. So bookkeeping is accounting for every dollar in and out of the bank accounts, and making sure you're picking up all of the transactions and putting them in their appropriate place so that we can determine what the assets, liabilities, income, and expenses are. There's a lot of different programs that are available to you. And as basic as, Excel, just writing up the totals works depending on your situation. And if that's not enough, there's bookkeeping programs, and there's bookkeeping programs that are geared towards self-employed, and there's bookkeeping programs that are geared towards corporations, and picking the right program will make it an easier bookkeeping task, right? Then everything will find its place. QuickBooks Online is my favorite. So anyone who has QuickBooks Online or has heard about it, I do love QuickBooks Online. It's what I use personally. It's the program that my staff use, and the clients are supported through QuickBooks Online. This way, everybody has access to it. It's safe because it's online. And like a lot of other programs, you can attach your receipts directly to the transaction. So if I needed to go into a client's travel to see what that was for, or maybe I thought something was misplaced, or I needed more information, or I needed to support an audit, the receipt and notes can be attached right to the transaction. So everything is there and clear. A lot of these programs now, including QuickBooks Online, you can import the transactions right from your bank account or your credit card, and then you bookkeep them, you place them, but it saves the typing up of what this was or the description and all that. It's all there for you. And a lot of these programs do some prediction. So if they see Air Canada and you keep putting Air Canada travel, the programs learn that Air Canada goes to travel. So there's great things about these programs. Expensify, Wave, Zoho Books, those are also good ones. I would say more for self-employed rather than a corporation. And it's really important to separate out, when you have a corporation, your personal bank accounts from the corporate's bank accounts. So kind of going back to what I said about how to take money out of your corporate account, we listed off all the corporate expenses, but when you have to pay for your home, the majority of your home will be personal, medical expenses, groceries, anything that's really personal, taking the money out and paying for those expenses personally through payroll or dividends is important, and then having the company pay the business expenses directly. When you're self-employed, it can be combined, or you can have a separate business account depending on how messy it gets. If it's definitely clearer to have a separate business bank account, because then or a separate business credit card, that Amazon, oh yeah, you picked up some supplies through Amazon. It wasn't, a gift for your nephew's birthday or whatever, making things up. But the separation is key because you have to keep those receipts. But when you're doing the bookkeeping, if every time you buy something from Amazon, it's usually some supplies for office or music supplies, then it's easy to do the bookkeeping without having to go and save all of those Amazon receipts. You can still do it. You should still do it, but at least you can get the bookkeeping done. So that separation can be really important. The simplest form of bookkeeping, I would say, is just keeping those receipts. And at the end of the year or quarterly, even maybe halfway through the year, and then the rest, beginning of January, divide your receipts up into their categories and total them, whether you're doing that on your computer because you've saved them digitally, which you can do, or physical receipts, and then you have your totals. That would be the simplest way. And then separate bank account, Excel, a bookkeeping program. It can go, up to a QuickBooks Online scenario where you can invoice from the program and everything is recorded. When you're using a bookkeeping program, it also helps you track your receivables and your payables at the same time. So it's easier to see what is owed to you, what's about to come in, if you have to follow up on anything, which if you can do that through an invoice folder and your listing and you keep track of it that way, that works, whatever works for you. Okay, before I move on from the bookkeeping, were there questions?
Yes.
Okay.
You did basically answer it, but I'd rather just address the questions anyway.
Sure.
So somebody asked, like you talked about, at times they need to pay for business expenses using a personal debit or credit or cash.
Yeah.
Can those still be filed under corporate
Yeah.
expenses?
Yeah. It happens. It happens to me too. Even if you separate everything beautifully, oops, I used the wrong card, right? And so yes, you can. What you should be doing is kind of creating like an expense report to yourself so that you can track those and make sure we don't miss them. The importance of separating everything, one, is to make sure we don't miss the expenses. And two, because CRA really likes to see that that business or that corporation owns that expense and that HST. But just like if you worked for someone else and you had to submit an expense report, you can still do that. The expense is not lost. There's just more of a chance that we're going to forget it or it is going to get lost if we don't keep those clean. Business pays business, personal pays personal, but you can't. I often say to clients when I'm collecting their information for a corporate, I'm like, and any other expenses that were paid personally that belong in the business, like provide me a list and I'll pick them up. When you have mixed expenses like home office, vehicle, phone, internet, my advice is always to pay where majority of that expense is going to land. So your home, most of your home is not going to be through the business. Pay all your home expenses personally, and then pick up the business portion. For a lot of us, most of our cell phones are business. We're running our business day and night, and we've got a lot of cell phone airtime, and right, that should be business. And so pay that through the business, and then we back out a personal portion. And it really depends on what the business uses. So that's a bit more on the separation of personal versus business use.
That's great. Thanks, Sondra.
Okay, excellent. Audit triggers. This is a popular one. There's the basic audit triggers, filing late, filing multiple years in a row, not paying taxes, getting audited in one area and not doing well in it can sometimes trigger an audit in the other area. CRA's departments don't generally talk too much, but I have seen scenarios where, let's say someone's going through travel expense audit and lots gets denied, that HST picks it up saying, hey, if all those expenses got denied, we should be denying the HST, and it can trigger something else. Another thing that's common in the music industry is when you have losses more than 2 years in a row, CRA wants to know if you have a business here or if it's a hobby. And I say it's common in the industry because it is. It's common to have losses for multiple years in a row before you have a profit. And so I'm often educating CRA on the business, right? Which is another reason why an industry-specific accountant who understands the business is going to know how to talk to CRA about what the business is and why there are losses. So things to support that would be, like I said up at the top, getting a business number, even if you haven't opened a business account, not a bank account. I'm talking a payroll account or an HST account. You can still have a business number. It's kind of like a SIN number for an individual, but for the corporation and how CRA identifies this business. Making sure you have your support so that you're not scared to have this loss, because this loss can be very valuable. If you have a day job and you're starting up a music career on the side and it's a loss at first, that loss goes against your employment income and can trigger a refund for you, which is beneficial because you can put it back into your business. But CRA goes, well, what are you talking about? If you were working full time, how do you have this business on the side that has a loss? They want to make sure, they want to know, did you have a business number or did you apply for a business license? What kind of work are you doing? Are you trained in this area? Do you have the education to do this? Or are we trying to write off personal expenses? And so after 2 years, they usually write a letter. Or if I've even seen it after 1 year, but more often than not, it's after the 2 years. Sometimes they send out a letter going, are you sure? Are you sure everything? You have no adjustments here? Okay. We might audit you. And then they may or may not. Sometimes they just don't. 1 year they did that before COVID and none of them got audited that I knew. So anyways, so I'm mentioning that as an audit trigger. And then also CRA comes out with their specific programs. So right now they're still after 2019 travel for some reason. I just submitted one yesterday where they pick up a line item. And that's more for corporations where they'll pick up a line item. They've done vehicle expenses, advertising and promotion. And then you just have to supply the support for that one line item. So when it comes to your bookkeeping and organizing your receipts, I recommend organizing by type of expense. Some people recommend by month, but for me, if I'm going to find the ledger of that expense, they're all going to be together. So that's what I recommend, but those are the audit triggers. But if you have your documentation ready, nothing to be scared of with an audit. They're annoying because they're there and something to do because you have to prove yourself. But when we submit tax returns, everything is submitted based on the honesty system. I'm not submitting a client's tax return with all of the support, whether I've seen it or not. I'm submitting the numbers and then CRA can audit it if they choose. Sometimes I'll have clients go, oh, is it really worth it? If they're auditing me, let's say for medical expenses, nothing to do with the business statement. Should I even respond if it's only going to make a difference of X and your fee is going to be X? And the answer is usually yes, because when you respond and you do well with an audit, CRA sees that. If you don't respond because it's not worth it, you could get audited again in a couple of years because they know they're going to get some money from you. So they're a business in that way that they're wanting to get something back. Some common mistakes I see, especially with, cultural industry clients. I have a lot of clients that will go, well, when I make money, that's when I'm going to hire an accountant. I think that there's a mistake there because something as simple as the advice of being registered for HST could make a difference. Making sure you're capturing the expenses. Also, that loss is valuable against other income or future income. So even if you're in a loss position, it doesn't mean that that there's not value there. You have to have the funding for it, but it could still be very valuable. I think it's really important to get an industry-specific accountant because the first thing that we have to do as the accountant is to understand the business. And if you have someone who understands the business, you don't have to explain things over and over again. That's really great. All CPAs are wonderful, but I think that we all have our specialties, and an industry-specific accountant is very important. Having your bookkeeping in control, feeling good about it, really relieves stress in a lot of different areas. And so I think that there's a mistake there that if you're leaving it to last minute or feeling like you don't know which way to go, or making sure you find someone to do the bookkeeping for you that can do it and is reliable is really important. Or you end up not claiming expenses, or that you could have claimed, you end up missing a filing requirement deadline that can cause you interest and penalties. And so I've seen that mistake. As music managers, I see the mistake of not having a clear difference between what are your expenses and what are your client's expenses. And making sure that if it is a scenario where you're going to get reimbursed later, that there are lists for that, there's support for that, that you have a receivable listed in your business, knowing that it's going to come back to you and that your fee is separate than a reimbursement. So making sure that that's clear, so everyone's on the same page, and then it's fine.
There is
Okay.
one question actually I just want to address because
Sure.
I'm not sure if this was in the advanced questions or not.
Okay.
But somebody asked so this is about like company structuring.
Yeah.
So they ask if you have a company for music and music services,
Mhm.
but also want to self-publish or have a publishing company, do you need to register a separate company?
I think it depends on the situation.
Yeah.
I don't know that I can say yes or no to that. I think that often the answer will be yes, because of rights and ownership and grants and things like that.
Right.
But I think it depends.
Okay. Thank you.
Okay, question. The question was, what is the easiest way to report to our accountant for tax time as self-employed and a registered business? Is there a program out there better than submitting organized physical receipts and bills and check and payments, etc.? So for me, I don't want to see my clients' business expense receipts. I do want to see medical expenses. I do want to see T-slips, donation receipts. I want to make sure they're correct, but I don't want to see everybody's Staples receipts and etc. Right. And so I send out a tax checklist to my clients in two forms. One is a PDF where you're answering yes or no so that I know where to go on the return and what I would need. And the other one is an Excel spreadsheet where you would just put in your numbers, or if you have a program or an Excel spreadsheet you're using, just send that to me with your totals. So I think everyone's different, but for me, I don't want anyone's receipts. Unless I'm doing the bookkeeping. Just the summaries are good, and making sure that the GST and HST collected and spent is separated. That's very key. And then also on my checklist, there's a portion for, here's 100% of my cell phone, but 80% was business. So I know what to do. Another question, under what category would the AFC or Unison Benevolent Fund money come? How do we report that, basically, is the question. Any financial support, I would say, can't say any. Most of the time, the financial support is income. So we definitely need to be reporting that. You can report it on your self-employed statement, or you can report it as other income. There's no GST or HST on that type of support, but it is taxable. This question was, are there any particular online tools or platforms or strategies for the record keeping of supporting documentation? So I did go through all those different bookkeeping programs, but important to mention also that everything can be digital. If I'm submitting a response for somebody's audit, I'm submitting it through their online portal. I'm not faxing, I'm not mailing, everything gets scanned. So if you brought me something physical, I'm scanning and giving it back to you. So everything can be kept digital, so you can take pictures of those receipts, especially the ones that fade, like the gas receipts and meals and entertainment. And you can have a portal, something, make sure it's backed up so that you don't lose it. You have to save your stuff for 7 years. That also gives you an opportunity to organize it digitally into folders or however you want to do it. I talked about Mile IQ as a popular mileage tracker. That was one. Somebody said something, somebody asked a question and it's not related to music at all, but what I've spoken about today is your business, but there's all these other tax credits out there that apply to everybody, like medical expense tax credits. There's a disability tax credit, which is a really big one. So if you do have a disability and you take your form to your doctor to fill out, you can submit for that. There's extra support and available funding for you. There's the staycation tax credit for the Ontario people here attending today. This year we get this Ontario tax credit. So if you did pay and go to a hotel or something like that, there's that available. So there's lots of different things. Other things to know, the CEBA loan. If you have a business and you receive the CEBA loan this year, or not this year, sorry, if you still have a balance this year, it is due back by December 31st, 2023. That is a key date. They extended it and they didn't really advertise it, but if you haven't paid it back, you have till the end of this year to do so, so that the forgiven amount stays forgiven and it doesn't turn into a loan. Another thing would be CRA has changed their rules on how we as accountants get authorized on business accounts. So if you don't have a My Account with CRA or a My Business account with CRA, I highly recommend you get them. For any new client that I'm onboarding, I need my clients to have a My Business account in order for me to get authorization, which will allow me to ask CRA questions, get a notice of assessment, see what's in installments, file the HST return. So that's new because CRA is really pushing it. So if you haven't, I would do that as well. I think that was a lot. I'll just reiterate that everyone's scenario is different. And so if I've said something that you're like, well, maybe that applies to me, or that sounds really great for my situation, it's still worth a conversation just to make sure it would be the best thing for you.
Yeah, agreed. Agreed. This does not constitute a formal consultation. Now, does anyone have any questions? We've got her for another few more minutes. Ooh, there's that resource list.
I think I sent it to someone directly by accident.
I did the same thing. I thought I was talking to one person and I was talking to everybody. So, yeah, yes.
You can reach out. I am taking on new clients if you're looking for an accountant. But also if you're like, you said this, I don't really understand, I'm available for a quick call or an email back with some additional information.
That's great. Thank you so much, Sondra.
You're welcome.